This is Rod Kusin and Spoon for Risk on May 2nd, pre-market. We're looking at a composite market profile from the 27th of March. And we've mentioned this in the previous videos that we've got an area of repair down here around 2376. We haven't got there yet. But we have consistently bounced off of this level at around 90 3/4 as we see an area here that is properly formed in terms of its lack of market activity. There's really been not much going on here at all. And if we move to the next profile area on the 13th of April, we see we were able to move up into that area to 94.75 since then, since the previous profile. And you see that happening here, particularly on the 26th. We rallied up there for a bit and then came back down, and then yesterday rallied up to that level and came right down. Now it appears as if we are in an uptrend this morning, so let's take a look at that. Here's the overnight market. 87 was the close. I believe that's correct. Yeah, 87 was the close, and the market has spent most of its time below. But right, during the last couple of hours, we've had this tendency to rally up higher, a typical pattern which generally will continue to extend up. So I wouldn't anticipate, at least, that we would see much of a move down, maybe right into the area of 85.5, which isn't much of a drop. And then a solid move up, quite possibly to where we showed the composite here at 89 3/4. Oops, let's get that back. Pardon me, 90 3/4. And then we'll have to reevaluate. The formation of this profile doesn't really look that bad to me. It'd be nicer if it tailed off. So chances are, if we rally up and we get as high as 90-ish, 90 3/4, we get up here, and we're just losing strength. Yeah, then I can anticipate another drop back down, because this isn't perfect by any stretch, but it is not, nevertheless, this is not bad. The formation should have a little bit of a tail like it does here. Not the case here. So there's a little congestion at this point, indicative of a typical drop. Now we've got an area of low volume in here. I get 88. And if we look at the INX, let's spread that out a bit. The volume profile is a little easier to see. And this was the close at 88, and we're right about there where we were at the close yesterday. The open will be close to that. And so we've got volume, low volume here, here, here. Okay, various places where we can rally up and do a little area of repair, but we've got very low volume below here as well. So that's, I think, the biggest single issue. Now the big drop in here is suspicious in that according to the premium, that's not a naked bar, but it was a pretty good drop nonetheless. That's a pretty good size drop. So that tells me, and especially when you see the big drop that happened early in the morning, and then another larger drop here. Let's measure that. That's 509, so let's go back here. Okay, the earlier drop was just a little under that. So that could forecast for us return back to 81.25. I think that's quite likely today. But whether or not that's the direction we'll head at the open is another story. So we'll have to watch carefully. I would say, okay, let's bring it to a head. Okay, so based on everything I've seen, here's what I conclude. I can see it's coming right back down to the low value area shown here. That will bring us below the low value here, which is at roughly 87. If we drop to here, that will be roughly the equivalent of moving down to this area around 85 3/4 on the INX, right in here. So that would clearly be an area of support sufficient to get us to move up. Now, by the same token, we could start off the rally right out of the gate, particularly depending on where the INX opens. Now, if the INX opens low, then I would expect it to go down further and then move up. But if we move higher initially, especially if we move quickly toward that area around 91, then maybe another drop before we launch into a more robust rally. It's a little tough to call, but I can see several different possibilities here. think key here is whether or not the INX opens right about where we were at the close yesterday. That's going to be key. All right, we'll come back in a few minutes and see how we're going to trade this. On just one other thing, the composite on the INX shows us an 83 low value area, 92 and about half on the upper value area with 88 as the POC. Okay, here we go. Okay. INX opened quite a bit higher than we expected. It should have been only about 3/4 of a point. It opened up roughly 4 points higher. That's not good. I would anticipate that this will short fairly quickly. So we're going to go right over here to our other screen. moved right up to the 92.59 upper value, bounced off of that, we're coming down. Not yet, though. That's a little bit surprising to me. That's right up to that area that we were talking about before. But we're shorting this. Went up to 88.75. Okay, here we go. Good. Let's break through that. Okay. Probably move back to the 91 area, 91.87. Now, I frequently like to place, at least turn on this stochastic just to give me another good reason to be patient if I'm looking to take a trade. 84.25 is the composite POC. That's down to the low of the overnight market. Little area of repair in here. Well, it looks to me that that's the direction that we're going. We mentioned that perhaps right in here we may meet with a little bit of resistance. Which is right about where we opened to. Well, no, that's the, pardon me, that's the low thus far. So we'll come back in a couple of minutes. Well, we're already right about there. And we just hit the POC from yesterday on the INX. And now we're down to the low. Okay. And we're going lower. So now where do we go? expect to bounce right in here. And that would be at about 82.25 here, 87 down here. We're below the POC from yesterday. And heading right down into this range at around 85.5, potentially before a more significant drop takes place, if at all. But we've got such an area of repair in here, I kind of doubt it. I think we're very close to where we are going to see a rally back up. Yeah, I think this is about ready to sneak up a bit. We'll come back, see how high it gets. And it didn't. But now we're stretching forward a bit more. I think we can probably now look at getting a bit higher into these areas of repair. We've got a little bit of an issue at 84.25 again, which is the POC composite. Taking a little long trade in here. I think that's quite possible. But you can see at 84.25, that's right at that POC, the composite POC. And we're trying to get above that now. Okay, we got stopped out. We used a trailing stop from the low here. And this is oftentimes where we see resistance just as we're going up to this area. The descending low value area here, there's still room on the INX, so I would expect us to go a little higher. Now we're still going up. It certainly would seem like we are still going up. Look at these two levels on the premium here. In fact, let's correct that. That could be a little off. No, that's right. This is coming down just a bit. I don't think it's going to come down a lot. This area here of low volume is probably a good target to see this, see a little area of correction in here, and then a resume back up to these areas here and here. Okay, see that area get, we're repairing that. But not by much. Okay, and the POC just dropped. A little bit more repair. Premium is nice and divergent right here. Okay, we'll come back in a minute. Okay, I took a big drop and now coming back. Okay, another big drop, but the premium's divergent, so we're coming back up to a degree. So where are we going? You've got to know the answer to that question. So here's where we drop to. Just about where we were talking earlier today to that TPOC. And just before you get into that area of low volume and hear from the overnight market, well, pardon me, that's not the overnight market today, but the day before yesterday, on the 30th. So actually, this doesn't look too bad. This could be, because we've got divergence on the premium there. So I'm long. Not proud, but I'm long. We'll see if it makes it back to the POC. Okay, we made it up to 83.75. Should be able to make it to 84. Just looking at where we're at here. Repair this area right in here on the INX. Right in here. About a half a point higher. There you go. Interesting. All right, we're going to drop lower. You saw the drop here, and that should drop this a little bit lower, but then turn right around and go back up. It should. Just a little bit of divergence right in here. Okay, that's good. That's good. That's just where we thought it might come down to. But could keep on going. Okay, we'll come back in a minute. That's nice. This is just getting repaired right in here. I'm not worried. Now we had a slightly lower read on the premium here. I'm not too worried about that either. Now I'm worried. Okay, we're out. Okay, we got stuffed out. We got stuffed out. But that's okay. We'll try again on that long. Yeah, it just went a little further than we expected. Ah, there we go. All right. Okay, we're right up to that area now. Need to push through it a bit. So once we break through here, you know, it's the 85 target of the upper value area is somewhat reasonable because you've got so much area of repair up in here. All this area of repair. The INX is just taking its time in here. But I'm anticipating we're going to see I'm guessing a bit of a spike up is what I would think. So all of this needs to be repaired in here. So we're long, and we'll just come back a little bit later after we see this market move higher. I don't really see this moving into a short. I think we're long now for probably the next hour, but we obviously need to keep watch on things. So we'll come back after we see a little bit more evidence of a rally in here. Give it about 10 minutes. There we go. Come on. Okay, we'll come back in a couple of minutes. I'm concerned that this low value area here is getting very close to the POC. Here. That's the big POC, 84.25. Takes us back to the 24th. And we're struggling to get above that. And 88.06. I'm not sure if that's refreshed. So what we see here, 88.06 on the INX, just moved up there, just not really getting much support to move above either this or this. That pretty much says if we can't get above, we got to go back down. Now the question is if we're going to go down a whole lot or we're going to go down just a little. So we're being really careful here. Really careful. We're long, but I'm pretty concerned about that. Yeah, just as we moved up to 84.50, you look at how the premium dropped. Yeah, gotta come down. So back to the POC here again, looks kind of pretty much like what we're trying to do. Although we may have just made it, but it's a little too early to tell. But the premium has certainly dropped there. So we could be going a bit further down before we start to rally back up. But we're still holding a long trade here. I'm just not holding much. We'll come back. Okay. Now, that premium has got to get above that line. Failing that, this thing's coming right back down. POC in here is kind of all over the map. But as we are above it right now on the INX, that could be a good sign that we can continue to see this move higher. I hope so, because there's a lot of room in here that needs to get fixed. And trying to anticipate where this low is a little bit of a challenge. Let's take a real close look. All right. This is good. I think that's even better. Yeah, I see this area of correction in here. Let's blow this up a little bit more. See that? Little area of repair in there. Okay, let's see if we can't keep this going. So we were looking at that area of repair in here, and sure enough, that's really right where it came down to. Nice. Now, fix this in here. This drops to about there. Work on this, and then let's get this thing moving. Let's hope so. Now, I like to keep a video moving when this is happening because I want to have a record of how the market is behaving, particularly the INX, in these areas of repair. That tells me a great deal about how the market is behaving and where it's headed. And that's why these videos are long. They're not long for your benefit. They're long for, the videos are long for my benefit so that I can come back and have a record of what really was taking place in here. That's why these videos are long. I want to look at exactly what's taking place. Now, watch it begin to slow down here. It's moving right up to the low value area, or pardon me, the upper value area. There you go. Area of repair. See how that happened? Now that's kind of our target here. Nicely done too. Now, yes, we're gonna correct this too. This is too low, so we're gonna be coming back. And that's what you're seeing happening here. Probably all the way back to in here. Well, no, really, right in there. Or maybe even a little, no, I think that's actually a little better number. Okay, a little further. Mm-hmm. Okay, there's really not much here. This is going to spend some time all through here. But that's another good place to get long, right in here. And that, of course, corresponds here. But the premium dropped a little bit, so I'm kind of anticipating this might come back down. Yeah, look at the premium here. It's a little bit too low. So 83.50 ought to be checked. So we'll come back in a few minutes just to review how this market profile begins to appear as the day progresses. We'll come back in about 10-15 minutes. So the market came down to this former POC in here. Before she made its latest move back up. And then back in here again, a little area of repair. And now, as you can see, we're heading back to the area of repair right in here. Getting above that will take us up higher. Now let's take a look at the IB, the initial balance calculation. Now our initial balance calculation that shows the probability of hitting the first standard deviation mark. We are still at 75% since the last calculation for Mondays, 78% for Tuesdays, 91% for Wednesdays. A little bit better on Thursdays. The last time we ran the calculation was the end of March, and so through April we came up a notch for Thursdays, but we dropped from 86 down to 82% for Fridays. Okay, so that reverses our order here just a little bit, making Thursdays a little better than Fridays were. So Wednesday and Thursdays are our biggest probability, and the lowest still remains to be on Monday. So here we are on Tuesday with a 78% probability. Let's see if there's a good reason to anticipate that this will hold. So the calculation takes us up to about 92, and if we go back to, let's go to this. No, that's not what I want to do. All right. It would take us up to 92, which is way up here. I think that's not very likely. I don't see that happening. So let's look at the other side to the coin. It dropped to about 78. which would take us down to the low value area, the composite. That's more likely, particularly given the reluctance to get above, much above the POC here. So what I'm going to expect is this market to short to a new low for the day. And let me show you why I'm saying that one more time. In order for us to hit the first standard deviation, if we were to hit that, we'd have to be above 92.25. But to make it to the standard deviation mark here is at about 78. Okay. So right now it's a whole lot easier. Let's just bring that down just a bit. It's a little bit higher than that. It's a lot easier for this to move from where it is right now at 83 down to 78 than it is for it to move from 83 to 92. Just plain and simple. And there's just, we're not getting much in the way of movement upward. We don't have much buying going on. And so that would seem like the most probable direction based on where we are right now. And 78.25 is really where the $92.25 up here, 78.25 down here. Okay. That seems to be where we're headed. Now, you've seen how the market did begin to retrace here. I don't know that that's really changed the trend, because all we've managed to do here is to get right back up to where we were previously. But as you can see, we had a read on the premium there at 370. Now it's going to be less than that by a long shot, because we were at 380 here and we're under that now. We'll wait for that to display. But as we came down here, yeah, the INX came down to the low value area. There was some fairly good amount of divergence there on the premium, and up we came again. But I don't see it. I don't think that's going to hold, because we're not getting enough evidence of new highs on the premium to anticipate that this market will continue to move up. In fact, we're seeing just the opposite. We're getting lower highs on the premium and not higher highs. You can get higher lows on the premium and higher highs on the premium. That's showing you a trend. But if that's not happening, you can get higher lows, but if you're getting lower highs, ain't going to work. It's going to turn. And so that read was 85 there at the top. Nope. This is coming down. All right, we'll revisit this a bit later, and then we're going to finish up our video. Well, the fact that now the market has moved higher has caused us to want to rethink where this is headed. We had anticipated that above this level, the market didn't want to go into to correct things, but now that has clearly changed. We are moving higher, as you can see, and there is an area of, or at least an indication that we are going to be moving up in that area of 92 for the simple reason that it's attainable. Maybe we won't get that high, but in any case, all this area of repair that needs to go on is now taking place. So we have to change our perspective on the market direction here and reverse and go long. So some good opportunities for doing that. Let's just see where we're at here. I think we'll probably retrace down into this range. So we're at around 88.90, 889. That makes some sense. We've got a top right there and just a little bit below it. Now, of course, it could go lower, but that would be a good place. So that would place the ES. And let's see here, just about a point below where we are right now. And getting close, really right close to where the POC is at, based on the composite. That would give us a good ground for a rally from that point, but it may not go that far. So we'll come back and see if we drop that low. Now you see how the profile is developing an area of volume here, leaving us this big gap in here. So that'll get repaired. That'll get repaired. So this ought to come down. Now we are long at the moment, but I'm not holding a trade for much more than about a tick more than where we are at right now. I'm going to exit at 87.25 simply because we've got too much to the downside here that needs to be corrected. And we are really right where we were at the close of yesterday. All right, we're just above the close of yesterday, and we just hit my target at 87.25, and I'm anticipating that this is going to reverse on me, and we're right up to the open. This is where we opened on the INX. So I'm anticipating this will come back down. And then we'll try to resume the move up, because it just didn't have enough oomph when we first got started. I don't think we were low enough. So we kept on bouncing off of this level, but you got all of this in here that needs to be repaired. So up at this level where we have just gone into an area of repair and we're coming back down now, I can see us coming all the way down to this area around 89. And we'll revisit that should that occur. No, it is not coming down. It is continuing to move higher. we're in this area of repair now, so I anticipate that it will continue probably on up to this area around 91.37. I'd say that only because that's where we get into some higher volume, not much comparatively, but it would repair at this level. I just think it's likely to go up a little higher than that, which probably is of no particular consequence to the ES. So it did not retrace, and we are going higher. So we're just maintaining a long trade, a couple of contracts, and probably exit it as we get close to the POC. That should do it. Now here you find where the last drop came to. Again, low volume node, low volume node, low volume node, a little less here, but a lot more activity right in this range as we saw before. So little wonder that we are bouncing off of that level. That's why we need to keep track of all that. Now we're going to go up and futz around up here again before we go higher, because we obviously didn't want to go much higher than that, which was that same area of low volume in here. Didn't want to take it that high. And then we came back, started to repair in here. So that's the way you've got to approach this. And once you've got the data, then by all means you've got a lot more to work with. I can anticipate, since we're still fairly early in the day, that we can make this up to a high for the morning. I'm not sure. I'm not really sure that we're going to make it all the way up to the IB projection, but I can certainly expect that the market's going to come back. There's going to be a short this afternoon, and we should be able to drop below this area, 89.80 as shown here, and repair in here all the way down to roughly 89. So that's that's only 1.5 points away from where we are right now. That's not that big of a drop. But whether or not we are going to continue to move up and hit the high before we come down, those are all issues that can't easily be determined without plotting the premium and finding out where we are. So, and we may be coming all the way back down right now to the low value area, potentially, or lower than that, because that really doesn't make a whole lot of sense just to come back down that far. Because if you see where we are here, low value would be closer to down here, because you got good volume right there, actually. Pardon me, and I call that the low value area. That's the upper value area. Pardon me. So anyway, there we are, bouncing again. Okay, that concludes this video for today.